Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. I'm speaking with Marc Ducler, Managing Director of Astral Resources, a gold exploration company in Western Australia. Hi, Marc.
How's it going?
Good. Good to have you.
Yeah, thanks very much for having us on.
So let's start our conversation with just an overview of the company. What are the key things you want investors to know about Astral Resources?
Yeah, well, Astral Resources is a gold-focused exploration and development company, and we have two of our key projects, which are pretty much in the heart of the West Australian goldfield. So you've got that Kalgoorlie, Coolgardie, Kambalda area where it's a prolific region for gold exploration and development. And our projects are located, one is 14 kilometres from Kalgoorlie and one is 70 k's from Kambalda. So we've been drilling there at the project for 4 years now. We have grown the project to 1.5 million ounces, and in September last year we put out a scoping study which, talking in Australian dollar terms, was done at a very conservative gold price. So we used $2,100 Aussie gold price when the gold price now is well over 4,000 to do our mine optimizations. Excuse me. And we used $2,750 for revenue for our financial model, again, when the gold price is now over $4,000. And notwithstanding that, we still had a project that showed an internal rate of return of over 70%. We were producing a net present value of $440 million, and that's at $2,750. You move it to the gold price today, and we have a project that has $1.2 billion in net present value and is capable of presenting or providing over $285 million worth of free cash flow every single year. So that's what Astral Resources is about, and we're now moving from scoping to pre-feasibility onto DFS and then looking to develop our project.
Can you talk a little bit more about that? So what's the strategy for developing? Where do you take it? How do you take it further?
So one of the things we've been focusing on is, obviously, as you want to develop that project, there's some financial realities that you have to come across in terms of you have to have a company that is strong enough from a register perspective to actually raise the necessary funds to take your project into development. So a year and a half, or no, probably only a year ago, we were a $50 million market cap company. We were 5% institutionally held. And when you need to raise between equity and debt somewhere in the vicinity of $200 million off that 50 mil base with a largely retail investor network, it looks quite difficult. So we've focused on strengthening our register, strengthening our balance sheet. So today we have a market cap of over $150 million. We are 24% institutionally held, and we have $28 million in the bank. So we're in a very strong position to be able to just do the necessary technical work that's required to advance through those study phases. And we also expect, with that money that we have in the bank, to continue to explore. So we'll have a dual strategy of advancing the projects technically, but also growing by adding additional resources so that we have a mine life. At the moment, the mine life was 7.5 years of mining, 10.5 years worth of processing. I'd expect by the time we get to pre-feasibility, which is due in the June quarter of next year, we would expect to be mining for well over 10 years and processing for 14 years. So certainly we'll continue to grow as we move towards DFS.
So is it your intention to move towards, when everything is said and done with all the pre-feasibility to study DFS, to take it to production or find a partner? Are you able to talk about sort of the goals in that?
Our intention is absolutely to take it through to production. You can't have a strategy that's reliant on someone else, and so our strategy is to run through to production. And again, that the peak negative cash flow at scoping was $191 million. When you have a market cap of $150 million, I don't see a significant hurdle to being able to fund that project ourselves. So we certainly aren't in the business of looking for a partner and giving that value away.
I wonder if you could provide your take on the current gold outlook. What are you seeing in the market, and how is that the current gold market influencing your exploration strategy right now?
Well, look, it's certainly a strong gold market. I think asking a managing director of a gold exploration company to comment on gold is going to give you a very biased opinion. But as a result of it being strong, and as a result of the institutions looking to gain exposure in this sector, it's assisted our strategy in that we are confident of our ability to take the project through to production. And there is a lot of reward on the ASX at the moment for those producers. I mean, those producers are worth well over $1 billion in market capitalisation. We have 150 mil in market capitalisation. A successful pathway through to development will see us move into that $1 billion market capitalisation, which provides a tremendous amount of runway for our shareholders and for any new shareholders. So the gold price is facilitating us thinking in that way. Now, if you want me to talk about the macro with respect to gold, I guess I'll limit my comments to the point where I think Western governments will continue to be fiscally irresponsible. They've been fiscally irresponsible for a long, long time. And in that environment, holding their IOUs as a large part of your wealth in terms of their treasuries doesn't sound like a sound thing to do. And therefore, gold should continue to run strongly and be this store of wealth that will outlast many other stores of wealth, is my view on gold.
So as we close out the 2024, what are your plans for 2025?
So we are still drilling on site. We've recently completed programs at. So we have 4 deposits at Mandilla. So we've recently completed programs at Iris, EOS, and Thea. We've also completed another program at Camperman, which is that project right next to Kalgoorlie called Fayetteville. So we will have those results coming out in the lead up to Christmas and then early in the new year. We expect the diamond drill rig to return early in January, and we'll continue to drill with that diamond rig. We will re-estimate our resources at both Mandilla and Fayetteville and do that in the first quarter so that we can then work towards delivering the pre-feasibility in the June quarter of 2025. Once that pre-feas is done, we will immediately commence work on the DFS, and that will kick off ongoing exploration, but then multiple technical streams. And we expect to be able to submit our environmental applications to the government departments here in Western Australia probably in the September quarter of 2025. So we're certainly going to be very busy. And what's encouraging is we have that runway in terms of the cash in the bank with $28 million to be able to fund all of that work and beyond.
Definitely a good place to be in. Thanks, Marc, for joining me today and taking the time to give us an update on the company.
No worries. Thank you very much.
And thanks, everyone, for watching. Join us again next time for another edition of CEO Insights. If you like this video, like or leave a comment below. We'd love to hear from you. And if you haven't already done so, subscribe to our YouTube channel for more exclusive interviews and updates.